All right, good morning, everyone. Good afternoon. Today is the 3rd of December, 2023. I am Trendy John from Simpler Trading, and let's go ahead and get started. So before we do this, we know I've been doing this every week for many, many years, and I keep it really straight. If you're brand new, thank you so much for coming over and checking this out. It may look a little less involved than a lot of different traders out there who do their analysis, and the reason why is because we put a lot of emphasis on just supply and demand. I do have some proprietary indicators, but as I always say, the indicators are just something that makes the trading a little bit faster, a little bit easier once you learn the fundamentals of trading supply and demand. So again, I have a lot of stuff out there on my YouTube, so make sure you guys take a look at that. And then if you want to come in here and deep dive a little bit more, you guys can go over to Simpler Trading, look me up, I'm one of their traders, and then come into our very robust room. Very happy to see that many of our traders are doing very, very well. So this broad market analysis, the first thing we'll start with, we'll be looking at it from well, first of all, this is our platform, right? So most of you are probably traders here, but don't forget in the mornings, please, when you come over in the morning, check out our notes. All right, check out the notes before you get started for the day. So this is, definitely we're going to have reports and Fed speakers and catalysts basically that are coming up, so that you're aware. Okay, I'm going to obviously coach on this stuff, but again, this is just like a pre to the game. Right? I need you to look at this stuff. Tonight, you're going to notice that our notes here say December 3rd and 4th. So for our future traders who are trading tonight, I've already have the blueprints here for you. I did find supply and demand on a 2-hour to about a 90-minute chart. And we have our levels here that you can use for tonight. I'll be putting these out on X as well, so that our followers out there can just see the proof of concept of how we do business here. All right, so here is the BMA. So BMA stands for Broad Market Analysis. When I say broad market, these are the things that I want to go over. First thing we'll discuss again is ECON data, any kind of like Fed heads talking, those kind of things. But it's really important for you to understand that this information, one thing that Trendy does not do, and when I say Trendy, that's all the members that I'm teaching. It's very important that you understand we don't sit on our hands. All right, we find supply and demand before the market opens, before price pushes there. The focus here is that we teach you how to execute when price gets there. All of this here is just noise that pushes price into supply and demand. So in saying that, Monday we have factory orders, pretty quiet. Tuesday, PMI, job openings. Wednesday, ADP employment. You have U.S. trade deficit in here. Thursday, initial jobless claims, consumer credit. Friday, consumer sentiment, U.S. employment report, hourly wages. So honestly, compared to last week, I feel like it's pretty quiet. But again, these catalysts can cause a little bit of volatility in the market and push those prices to the levels that I'm going to be showing you here. For my future traders, we'll be looking at those future charts towards the end of this video. But before we continue, please give me a like and please share this with anybody that may be struggling in the market. If there's one thing that you can go back and look is the proof of concept. Not only do the alerts from our API kind of show that proof of concept, but also just the coaching involved. There's a lot of traders that were pushed in the wrong direction just actually 5 weeks ago now, who were absolutely crushed. And I hate to see that happen. All right. So again, please share this analysis with your friends, or just go out on X and give us a little bit of love out there and let other traders know how well you're doing here at Trendy Trading with Simpler Trading. Let's go ahead and move on. This is Earning Whispers. I've been using them for many, many years. And basically what I like to do is I come in here and I use my earning strategy that I specifically came up with. Like, I didn't come up with the option strategy, but I love using debit spreads, almost like a debit spread iron condor into earnings. And what I do is I underline the names that I'm interested in green, and that kind of just lets you guys know, hey, John could be putting on a trade here. And remember, all of these are buy to open, not sell to open. So what I'll be doing on these names, and if you have a name in here that I did not underline that you're interested in when the market starts, just let me know. All right, now this is the way I like to do it. For example, let's say that I want to trade Toll Brothers on Tuesday after the close. I'll be looking for the supply and demand. We'll structure those options around that supply and demand. And the idea is that I want to do it not on Monday. I'd want to do this like Tuesday mid-afternoon. And then, for example, if I wanted to do Vera Bradley, I'd be doing this Tuesday afternoon for the Wednesday open and so forth. We do have some names coming up this week that are very popular out there, but it is getting kind of slow. We got Broadcom, Lululemon, DocuSign. Here's RH Restoration Hardware if you're interested in that. Dollar General. Over here we got GameStop. We have Chewy. One of these I keep bringing up every quarter that I'm interested in, and I just feel like I just don't see how their model is going to last, and they keep getting hammered. I have not looked at the chart in quite some time, but that is Stitch Fix. You know, I just feel like in these times, I know that when I personally, and I'm bringing a little bit of personal stuff in here, but when I had a subscription there, it just was it was really expensive for the product that I was getting. And so I've seen them continue to push to the downside, but I'm just kind of curious in them. So again, these are just names that I'm interested in that I could be trading this week. Going on in here, we like to go over the neutral strategy. Many of you love this strategy, and I appreciate you and your support. This is something free that I just push out to the public, that I've been doing this again for many years. This was last week's results. You guys can see the strategy is really straightforward. You go long. This is made for traders who cannot be in front of the screens all day. All right, you know, moms, dads, people going to work, people who are in meetings, people have things to do where they can't stare at the screen all day. And you can set up iron condors around this. You could do debit spreads. You could do butterflies. You could just go straight up long and or short, equity, options, whatever. The idea is that we go long above the neutral. So last week was 452.13, and then you trim at targets, and you guys can see that worked out very well. Also on the QQQ, this one was pretty tight this past week, the NASDAQ futures. We'll talk about that here in a little bit, but overall it was just a neutral week for it. And then over here you can see SPY did hit our third, our third to fourth target there at 459. On the SPY QQQ neutral strategy going into this week, again, you can freeze this if you want to and take a look at the targets. Again, if you do not know how to trade this, please watch the video that's on my YouTube page. Very straightforward. These are the numbers to the upside and or downside. And then moving over here, I'm going to take you into my trading view so we can see this a little bit better. So give me 1 second here. I'm going to pull this up. Let's get there. All right, so SPY big picture. All right, now we do this from a quarterly perspective, and I've been keeping notes on this for a very long time. All right, and the reason why I do that not only is to remind myself, but also to show you just how well we do at coaching our traders. And I can go back there and look at it, and honestly, it's a reflection, right? I'm like, am I totally off here? Are we doing things wrong? And no. We're not. We're not totally wrong. We're not totally off. Matter of fact, I feel like we're right in line with the market. Okay. Now, what you'll see here, and I'm going to point out several different things to you. There's not many updates at all for this week, but I will point out some things maybe that I pointed out last week. So from a supply and demand perspective, looking at just structure itself, we have inside and down. We had inside and up. We came back into about the 618 or so, and on a smaller time frame, we had some inside and up formations here. Price pushed down into those formations, and you know, what would you expect when price is down here? A lot of negative news, a lot of fear, a lot of stuff being pushed out on the media to entice and push retail in the wrong direction. Bigger names loaded up, institutions and so forth, you know, while others were running for, you know, the hills. Like that's crazy, and I don't want you to be following what 95% of other traders are doing. What I'm trying to do is what I am doing for you is finding these levels before price gets there. And again, just to reiterate, I'm teaching you how to execute at these levels in advance so that when price gets there, you know what to do. Now, looking here, you will notice this is a quarterly candle. We have 26 days, 6 hours until this closes. So everything that I'm saying from a quarterly perspective can change. We have 26 days. Very important for you to also understand that. Okay, this is, as of right now, an inside and up formation, and that pullback this quarter that came into the EMA trendy cloud, you can see that was support. This was a place to start to get long, and I showed you that 5 weeks ago. Now, we are in the supply zone, and what I've done for anybody that doesn't understand this is I measured my supply zone, and then we broke it into quarters, 25, 50, and 75% of that zone. And what this does is it gives us targets within a supply zone. That way you're not just sitting here going, okay, well, where's my next target, man? Because this is 446 to 482, right? We need to have some sort of blueprint, some sort of roadmap to understand where I want to trim and so forth. So what did we do this past week? And this is important. If you look very close, it looks pretty much like almost like a double top, if you will, of testing price previously, right? We have two spots there. We kind of ended there. And as far as going into this week, even though this is a quarterly candle, I would say that your near-term support is going to be this 25%, which is 454.77. You could just say 454.5. And our near target is going to be 463.28. And if you look very closely, there's a blue level right there. That's part of our indicator that's identifying supply. So we are getting very close, and I'll show you this on the ES futures a little bit later. We're very close to the higher time frame supply zone. Okay, so we're getting near resistance. We're 5 weeks up, but again, we want to just follow price and try not to be too biased and try to call the market right now, because from what I see, it's very difficult for traders to do that. All right. Now, long-term support is going to be the entry into the supply zone, which is 446.5. Okay, so again, near-term support, 454.5, long-term, 446.5. My overall sentiment, you stay bullish until we start to break down below the supply zone again. Now, I get it. I'm not saying stay long and be hard-headed until price breaks down. So, example, I wouldn't stay long while price keeps going down and down and down and down. Basically, on the smaller time frames, the lower time frames, we look for the signs of supply being hit, lower lows and so forth to get us on the right side of the trade. Okay, but long term, if you're just an investor long term, I'm saying as long as we stay above 446.5, we continue to move up towards these little targets that are in the supply zone. And it's not until we break above that supply zone that we make all-time highs. And from there, I'll be using what we call Fibonacci extensions to give you those targets. Okay. So going into this week, big thing, just those levels that I'm talking about, okay? So no change really. Let's go to the QQQ. This obviously didn't do much this week, but I want to go over this with you again. So we have the inside and down. We have it inside and up. Same thing, 26 days, 6 hours. We didn't quite this quarter come all the way back to the 9 EMA cloud, right? But we did come into what we call the bull channel from 2019 to 2022. And if you don't know anything about the bull channel, then you're really missing out. Matter of fact, this keeps me on the right side of the trend very, very often just by using some Fibonacci that I teach here in the room. Notice that we have an inside and up, like I said. And notice that this one's a little bit different. There's that blue line again. We have tested it. We have broke through it. And a matter of fact, the last 2 weeks on the NASDAQ, we have come back and tested that blue edge. So it's resistance until proven otherwise. And now that we're above it, well, it's a different story, right? Now we're trying to create some kind of base and showing that maybe the last 2 weeks were supported by it. And I'll show you that again on the NASDAQ a little bit later. So what am I looking at going into this week? Again, there wasn't much of a change. We have made a new high. You guys can see that new pivot high there. But the next pivot high would have to come up and over this 401 level, 402. So that really is going to be a target for me. And if you guys want to, you can put this, you could put the 25%, the 50 and 75%. At this point, you'd be aiming for the 75% of the zone, and you're pretty close to it. All right, but near-term support, we're going to use this blue line right there. So we're just going to come up with our cursor, and it's just rough, 385.5. And then long-term support once again would be down here at the entry of supply, which is around 362.11. Guys, you can see the cloud works very well on high time frames, small time frames, and that's just something that you learn along the way. This really helps us stay in the right trend as well. Okay, so that's QQQ, bigger picture, and no changes really, but I wanted to give you some of those levels. The dollar, this is important. Why is the dollar important? I feel like it's really straightforward. The dollar's ripping to the upside. You want to be careful in the stock market. If it's pulling back, you see that the stock market continues to push up. This is always true. I mean, there's a day here and there where things aren't really in sync, and typically that will come during choppy times, okay? But for the most part, all you have to do is get a really good read on the dollar to understand what's going to happen in the market. Like example, I showed you that the SPY came into demand 5 weeks ago, and at that same period, the dollar was pushing into supply. So from a supply and demand perspective, price on the dollar pushed into the overall supply. We expected it to fall. And in the background, the SPY and the Qs came into demand. We expected them to go up. So we have what's called synergy. That synergy gives you the confidence to start looking for trades to the upside. And let's face it, things were really beat up. So here we are. What to expect going into this next week? Well, 2 weeks ago, and even 3, it's been a long time. But 2 weeks ago, I said, look, we're coming into a little bit of support, but you can expect overhead resistance. We hit that overhead resistance, we came right back down, and the market continued to push up. Now, this is the 618, and all I did was anchor my fibs from here to here, okay? And I found the 618. This is your golden Fibonacci level. Basically, what this is saying is if price cannot hold underneath it, that this trend is still intact, okay? So if you're a bear in the market, you still have a little bit of a chance here. If we start to break down below this, things are going to look really ugly if you're a bearish trader. Okay, what I think then happens is you have a high probability. Matter of fact, I've looked at these probabilities for a very long time. You have about an 85% chance that we will hit the 88.7 if we start to close under the 618. That puts the dollar down towards 100.5. What does this mean? It means the market, when I'm looking at the SPY and the Qs, can be looking to test those all-time highs. Shocker. It's been a crazy year. There's been so much negative sentiment. It just makes me so sad to think that many traders out there don't understand supply and demand. So, what if we bounce this week? That means the market will pull back a little bit. Notice that the 618 is holding. However, when prices are below the cloud is resistance until proven otherwise, right? So just because the market starts to, come into a little bit of demand on a lower time frame, don't get into this. I see this all the time. You get one day down and all of a sudden the bears come out of nowhere, right? And they're like, I told you, the treasury's doing this, the dollar's doing that, we're going to crash. I knew it was fake, and it's like, dude, just come over here, right? If this, then that. All right, really straightforward. This is what I'm going to tell you, okay? 618 holds, but bulls are in charge of the market unless the dollar starts to bid above this 38.2. So let's just do this together. Put an alert up here, and I would say right around 104.5, somewhere in here to 105, add alert. And if the dollar starts to move up there, then you could start to get a little worried, all right? During this time, sure, we can bounce and maybe we get 1 to 3 days down, but that is needed in the market, and so it would be welcomed, okay? So again, that 618 is your over-under going into the next couple weeks, to be honest with you, okay? All right, so let's move on down to the TNX. So this is the thing that, I love about being a supply and demand trader, and that is that we could see all this coming, right? You take out news. We don't watch news. I don't watch news. We haven't had news or any form of news in this house for, gosh, man, going on probably a good 8+ years now. All right. And that should I want you to think about that. That's how serious I am about trading. I am a trader. All right. I do not want talking heads giving me any sort of their opinion on what the market's going to do. I am a technical trader. All right. If for some reason one of your favorite stocks takes a huge dump over the year, then you could start looking at fundamentals. Of course, I'm going to find the demand zone, but you also want to know, okay, wait a minute, this is different. Right? This stock was trading at this and now it's down 80%. Is this worth taking a stab at? And you can look at some stuff like EBITDA and year over year growth, month over month growth, and all those sorts of things. And if things look good, I want to be buying those demand zones on those big pullbacks. But what I'm trying to get at is you don't need news. You don't need all this negative sentiment. See, we understood we hit a target up here. We went inside and down. We look for a move down into the demand zone. And that's exactly what has happened. I didn't need anybody else to tell me that. All right. So what are we looking at here? I would pull it into a daily. And just like the bear house, this is called the bull house. This is a demand zone. All right. And when we identify that demand zone, basically what happens as soon as we get in here, we could continue to push down, but be aware that price in a demand zone at any point could go bid and we could see a significant push to the upside. All right. So again, the TNX, if you look at it, if you were to measure this zone, we're probably pretty close to about 50% of that zone. All right. It's not until prices close underneath this demand zone, and you guys can see there's a trendy edge here. It's not until we close underneath here that things really look great. I mean, honestly, for the TNX to drop down here again, it just is like, from this perspective, when I say great, I'm only looking at it straight from a chart. All right. I don't want to get personal feelings involved, what I think about the macro economy or anything like that. All right. I just want to trade price. And if we break down below here, you're just going to get this huge rip into this year, in my opinion. Okay. So again, dollar, TNX, they're both at areas where they can bounce, but they're also underneath resistance. So they could bounce, the market could come down a little bit, but it doesn't look like too much of a significant pullback at this point. Again, things could change. So where could the TNX go this week? Well, if it bounces, I'd expect it to reject around 4.3. And if it continues down, you could see something around 4.1 to 4.0. And that's what I'm looking at on the TNX 10-year Treasury. Let's go ahead and look at the SKEW. If you don't know anything about the SKEW, I highly recommend that you go over and look it up on Google. But also, you can go to YouTube and look at the time that John Carter was teaching in Las Vegas, I believe, for one of the money shows. And if you just type in like John Carter Las Vegas SKEW, you're going to come across this really good video that I watched many, many years ago. And a lot of traders will say like the SKEW is broken. It is not broken. You're just looking at it wrong. You got the wrong blueprint, or maybe you just don't understand how to read it. Okay, what I want to do is look at it from a weekly perspective, and I've kept this note and I'm going to keep this note. I will tell you this is really interesting. From last week, Friday close, to this week, all right, so the last 2 weeks, we closed at this same exact number. Look at this. This is last week. This is this past week. Isn't that crazy? Absolutely crazy. Sorry, 2 weeks ago and then this week. Right at the same number, and this is what I'm going to say. No update, but this continues to be very relevant. The SKEW continues to stay in the protect area and fluctuates to the bearish and bullish in here. In my opinion, we stay within here this year and we see a more extreme level in early 2024. Matter of fact, if things kind of, go the same way they have been for the last couple of years, February will be ugly, January could be fun. Extreme would be at the green lines. If for some reason this is the last video you watch and you decide to go somewhere else, right? Just remember this. The market will be at an extreme level. The market's coming to an end. Nothing will save us. And here, folks, I am 100% risk on. This is my favorite area in the market. The timing is the variable if we get down here, and it's very common that we get to levels like this, okay? Very common. It's just that this year reminds me a lot of 2020, one where we stayed up here. You guys all remember this? There was actually a lot of negative sentiment because a lot of traders like me were looking at this going, hey man, these are extreme. We should have a pullback, but it never came. So it was really hard to press the gas pedal. I thought 2021 was actually pretty hard. Well, instead of not learning from my mistakes, now I'm applying that same idea here that don't fight it. Just trade the trend, but understand that at some point you will come to this risk on level. It will be extreme. You will be scared, and hopefully you still have something left in your cash account that you're able to take a trade. And I always will, and I will be waiting for this level. The timing is the variable. I don't know exactly when it happens. I'm just thinking early 2024. It makes sense in my head because we have elections coming in, but I could be wrong. Maybe the market rips all the way into elections, and then when whoever's elected, the market crashes. Like, I don't know, and it doesn't even have to crash. Again, let's just follow price. All right, so the fear and greed index, let's go ahead. We'll pull that up real quick. I'm going to go right here, pull this up. So your fear and greed is at 67. It came down 1 point from last week, right? 1 week, or 1 week, only 1 point. So they're still showing us greedy, all right? And when you start to look at the things that I'm showing you, okay, we are coming close to, and I'll show you this here in a minute on the future charts, we're getting close to a supply zone. Not quite there, so we still have room to the upside. We are dollar could bounce, okay? The TNX could bounce, right? We're all in those right areas. And when I show you the SKEW, you know, I showed you just a few seconds ago. Sorry, it's right here, right? We're at that protect risk off area. So everything's lining up to say, hey, be cautious. But again, I have PTSD from 2021. It also said that, and we just couldn't get the pullback. So how do we approach this kind of stuff? Like, you're feeling it, you're looking at the right things. You know, you've been around in the market to understand that the levels feel extreme, right? And so if we come over here to the NASDAQ, you know, it feels extreme. 1, 2, 3, 4, 5 weeks up on the NASDAQ. You come over to the ES futures, you're going to get the same thing. So we know what this feels like, and we know that the markets don't just go up. Sometimes there's a couple things that you can do to make yourself feel a little bit more confident in your analyzing. So besides supply and demand and all those good things, what you could do is go back this year and only look at a 1 year time frame. So you're going to go, it's December. I want you to go back to December of last year. Okay, and that would be around, let's see, there's October, November, about right here. All right. And you could count very quickly, and we could see how many times, so this is about December right here, okay? How many times during the year does the ES futures actually move up 5+ weeks at a time? Now, you may have some data where you can plug that in and ask it. If you do, cool, do it. But I really like the old-fashioned way, and I always tell everybody that. So let's just look at the candles, right? Hollow candles on my chart are bullish. Filled candles are bearish. All right, so let's look at them. It's really straightforward. You got 1, 2 weeks there. I got 1, 2, and maybe that's a third one. I just don't feel like zooming in at the moment. We have 1, 2, 3, 4. So we have 4 weeks there. 1, 2. 1, 2. 1, 2, 3, 4, 5. This is right here so far the only period within the last year that did 5. Let's see if we can find some more. 1, 2, 3, 4. 1, 2, 3. And now 1, 2, 3, 4, 5. So it is safe to say that it's actually pretty rare that the market go up 5 weeks in a row. So all these things I've shown you, now we just went into basic fundamentals of counting candles, right? But all signs are pointing towards maybe just a little yellow light in the back of your head, okay? But again, when we get to this point, I see a lot of people get run over by trying to call a market top, and that's not what I want you to do. I want you to take this information that I'm providing to you and start to put this together and say, okay, all of this is pointing towards at least a yellow light, right? Now, let's break it down and listen to me closely from ES and NASDAQ futures. Weekly traders, for traders who have been following me for a very long time, you know this is the big picture. It's a if this, then that. Institutions are not looking at 5-minute charts, they're looking at the big picture. When I look over here, you guys can see this is your ATH or your all-time high. All I've done is simply place a supply zone by using the topping wick and using it right here at the top of this big down candle. This is a supply zone. Okay, matter of fact, if you go to the quarterly, you'll see it, but this is an advanced way of putting the supply zone on here. When you've been doing it for a long time, you get the same supply zone if you go to the quarter. Okay, now I have a trendy edge here that's been here for over a year. It's already identified it. This is just, again, my proprietary indicators make it easier for me to find, and I always teach you how to find the box. So what do? Well, when we get to this point, it's a if this, then that. Again, a lot like the SPY and the QQQ big picture, this is what I'm going to say to you. 45.38 holds. I'm still looking for a move at least into the supply zone of 46.58. Sure, you could zoom in here to get yourself some closer targets. You could use this topping wick and this one, and I'll show you that here in a second on a smaller time frame. But far as big picture goes, yes, it looks like we're extended a little bit from the cloud. You guys can see that. I've used the 23 and the 38.2% of anchoring my fibs right here. That's where this support zone comes from. So 4,500 by 44.28. If for some reason in December we decide to pull back, this is where I'm a longer term buyer and I would be looking for support here. Let's go into the daily. I did not change my triggers this week. Okay, so we hit the resistance over and over and over. It didn't lie to you. It worked very well. And just like any other resistance, after so many taps, we broke through. And now on my daily, we actually got a buy signal. This is that trendy edge I showed you on the weekly. This is my short trigger. Do not get this confused. For trendy members here at Simpler, you guys know there's a certain way that we look for the actual short here. There's an aggressive way and there's a conservative way. Do not think just because it says short trigger that we are going short. We assess when we get there and there are certain things that we're looking for. Okay. Let's go over to the 4-hour, just like last week. There's no change here. The reason why there's no change is because we have higher levels that we're looking at on a weekly. Okay, and those are the levels that we're looking for as far as targets. These, the reason why they're important is, just in case we get a catalyst that shocks traders, we'll be looking for these levels as support. None of them have to work. Matter of fact, during COVID, during big catalysts like that, I've seen every demand zone get busted through, and it's not until we get to like a quarterly or a monthly demand zone that it actually works. That is possible. So please understand, just because we have demand and supply zones, they don't always work, but damn, they work a lot. And it's not until you have this catastrophic catalyst that you see a big candle that breaks all of these. So these green boxes are very important to you right now. Okay. Now, tonight, like I said, in the notes section, notice on the ES futures, I have written down the 3rd and the 4th. So if we come down here and we go into our notes, right, these are going to be your blueprints for tonight. And this economic data, this is going to be for tomorrow. So again, it's just factory orders or whatever. All right. But this is what it looks like. All right. And a lot of traders, when I put this out on X, you may not understand exactly, you know, you'll see. You'll see. I do it go back and look. I do it every day. We almost call the market to a tick, but you may not understand the intricate part of the entry and so forth. Basically, what I'm going to tell you is the targets are your bigger turning points in the market. If you want to be patient, you can wait for these, or we have what's called the pre-market zone that we use that's a little bit more aggressive, but we also love to be patient. What I like to do from an SPX standpoint or even a SPY is when prices break down and get to my lower levels, this is where I want, especially on an intraday status, I want to be trading butterflies to the upside. And if for some reason we break to the upside like this, and we hit here, then you'd be looking for those butterflies to the downside. And again, I'm not going to go big into that, but this is where we expect the bigger turns in the market. And then far as like entry, we're using smaller time frames getting in. Liquidity chop, let me go ahead and explain that for anybody that's new out there. This is where I expect prices to range in here and for the market to build liquidity from retail traders like you and I. But specifically more of the retail trader that, you know, refuses to learn better strategies, and they use the same strategies that 95% of other traders are using. They're getting stopped out in this section. That's all I'm saying. All right, so they're going to take your stops, build the liquidity, then they are going to make the move to the targets, okay, after they've sucked all your money out for the day, okay? So again, liquidity chop, every line to the upside is areas where we look to trim and trail, all right, and same thing to the downside. And then once we break it down into a 5-minute chart, we have the pre-market zone that tells us, okay, you go long above this, short below this, okay? And you're not seeing that, you're just seeing my targets on the screen themselves. Let's go over to the NASDAQ futures. And again, guys, if you're just tuning in, don't forget to give us a like and share this as well. I'll be putting it out on X, so I'd love your appreciation of a heart over there just to let me know, hey, John, I really appreciate you taking your time on Sunday, because I have to tell you, you know, I do this for free. You guys all know I got bought out, right? So I work at Simpler, but the truth of the matter is this BMA has nothing to do with what I have to do for my members. This is all on my free time. This is not part of the service. This is something that I do to help traders. So I really appreciate when traders watch this, if you could just give us a like to let me know, hey John, I want you to wake up on Sunday and take a few hours of your time and share this with us, okay? So please make sure you hit that like. This is the NASDAQ futures. We're going to go into the weekly, and again, just like the ES futures, we are approaching that supply zone that I was talking about, okay? So using structure and past yearly edge is what I'm saying here. So that's for our trending members. So the yearly edge is this blue line here. I'm using a past one and structure. The difference between the NASDAQ and the ES futures when you zoom in is that we're above the trendy edge. It worked just like it was supposed to, right, back in the past, and then we came down into that lower demand zone, we pushed up, and here we are 5 weeks later. And what I told you earlier is we came back on and tested that blue line, which was a previous supply zone. It is trying to create a base there for the last 2 weeks. I don't know if it looks too convincing, but the level's working very well. So please be aware that you have a supply zone here. Same thing on the ES futures, very close to that. We do have a little bit of support at that YE, but as far as the bigger picture of the weekly of the NASDAQ futures, 15,769 by 15,265. This is that same area. If for some reason in December we were to get an extreme or a bigger pullback, I should say, this is where I'd be looking for buyers to show up. Okay, so again, from a weekly perspective. Let's move on to the daily. Same thing. I have not moved these levels from last week. Matter of fact, if you followed the levels that I presented to you last week, you did very well by triggering long off 15,872. And you can see that the resistance worked very well on Wednesday, and then we pulled back on Thursday and Friday into my trigger longs, and it worked. Proof of concept. I can't make this stuff up. I'm giving it to you before price gets there. Not many traders can do that, especially when we're talking weeks, months, years in advance. Let's go ahead and push this in here. This is your 4 hour. Same thing I said on the ES futures. Notice that these green levels are very, very important. Also, just look at how well your trendy edges worked this week. So for my weekly and daily traders, you guys got good buys right off the trendy edges. And so that worked well. Just understand where these green boxes are. And just like I said on the ES, these could really help you out there. Now, this is your blueprint going into the 3rd and the 4th for December. December, just like I showed you on the ES futures. Go ahead and take a snapshot of this if you like. This will also be sent out on X tonight to kind of help you traders. And again, if you have any questions about this or you want to learn, don't forget to come over to Simpler Trading and check us out. We have a trial that's $7. Like, if you're not taking that opportunity to come in and learn, $7, come on. And it's for a long time. Again, the proof of concept is there. The strategy is there. The strategy can be back tested since the inception of the market. And by far, I know I sound biased, it's the best thing out there. You learn to just look at the charts, trade what you see, and let the other folks who are having a hard time pay attention to the news channels. Okay? Just because it's on the news, just because someone writes a blog, doesn't mean anything. You start to learn that as you get older and older, right? Anyways, you guys have a beautiful Sunday. We went over everything, and I appreciate you, and I can't wait to trade with you in the morning. See you guys soon.